Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Trinity Capital Inc. quarterly report. Trinity Capital Inc. offers a diverse range of businesses and services, including term loans, equipment financing, private equity-related investments, tech lending, life sciences, financing, warehouse lending, sponsor finance sources. The stock price of Trinity Capital Inc. has increased by over 21.21% in the past year due to several key factors. The company's consistent and increasing dividends have been a major draw for investors, with 23 consecutive quarters of either maintained or increased dividend payments. Strong earnings performance has also contributed significantly, with robust financial results exceeding market expectations in multiple quarters. Notably, Trinity Capital achieved an investment grade rating from Moody's, which likely boosted investor confidence. Additionally, the company's active growth of its portfolio and impressive annual earnings growth have further supported the increase in stock price. These factors collectively demonstrate a strong financial performance and stability, leading to the notable appreciation in Trinity Capital Inc.'s stock price. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. Revenue growth is primarily driven by an increase in net investment income, total investments, and interest receivable. Additionally, proceeds from sales and paydowns of investments, purchases of debt investments, and accretion of OID and EOT payments also contribute to revenue growth. On the other hand, revenue decline is largely attributed to proceeds from sales and paydowns of investments, net realized gains/loss, and early debt repayments. Furthermore, specific drivers such as Nexii, Inc.'s equity investments, Go4 Delivers, Inc.'s equity investment, and securities investment in Goldman Sachs Financial Square Government Institutional Fund also impact revenue growth or decline. The private common stock offering, initial public offering, IPO, and equity ATM program have also played a significant role in driving revenue growth. These factors collectively contribute to the fluctuations in revenue growth or decline, highlighting the complexity of financial performance. The company's financial performance indicates a significant achievement in its ability to generate cash from its core operations. With an operating cash flow of $166,896, the company has successfully converted its earnings into liquid assets. This positive trend suggests that the business is financially stable and capable of meeting its short-term obligations. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased from $1,222,077,000 to $1,602,131,000, page 210. However, by September 30, 2025, it had risen further to $1,996,541. The total contractual obligations also saw a substantial increase of $1,176,858,000. In terms of interest expenses, there is conflicting information. On one hand, page 214 states that the interest expense decreased significantly in 2025 compared to 2024. On the other hand, page 249 indicates an increase from $16.9 million in 2024 to $21 million in 2025. The key bank credit facilities available borrowings decreased from $487 million as of December 31, 2024 to $208.4 million as of September 30, 2025, page 252. The interest rate range remained unchanged at 2.85% to 3.25% above adjusted term SOFR. Overall, the company's debt level has increased significantly, while the interest expenses show mixed results. The performance of various segments and regions in the financial summary reveals a mixed picture. The West region and Northeast region showed improvement, with increased cost and fair value in the former, and decreased costs but more significant decreases in fair value in the latter. On the other hand, the Midwest and Southeast regions underperformed, experiencing declines in both cost and fair value. Internationally, Western Europe remained constant at 3.9%, while Canada saw an increase from 0.7% to 2.4%. Management is optimistic about the company's outlook, citing a strong growth strategy through acquisitions and joint ventures, as well as an expanding investment portfolio through new partnerships and funds. The company aims to generate current income and capital appreciation across 5 distinct vertical markets while mitigating risk through amortizing investments. Key highlights include expanding presence in the market with Nasdaq listing, increasing use of credit facilities, and potential issuance of securities commitment to paying distributions to stockholders. However, management also acknowledges significant risks from global economic, political, and market conditions, including potential downgrades in U.S. government credit rating and deterioration in Eurozone economic conditions. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, indicating a focus on distributing profits to investors. Secondly, it has also engaged in share buybacks, with a $30 million program authorized in 2024, although no shares were repurchased during the specified periods. That concludes the financial summary for Trinity Capital Inc. Feel free to comment below, and I will be happy to answer them when possible.